Ever wondered where Ally Bank keeps your hard-earned money? It's a common question, especially for those new to online banking. Let's dive into the details and uncover the banking partnerships that power Ally. Introduction. Ally Bank, a popular online bank, has gained significant traction for its competitive interest rates, user-friendly platform, and excellent customer service. But where does Ally Bank keep your deposits? Is your money safe and sound? In this video, we'll explore the banking institutions that partner with Ally to ensure the security of your funds. The role of correspondent banks. To understand how Ally Bank operates, we need to grasp the concept of correspondent banking. Essentially, correspondent banks are financial institutions that provide services to other banks, such as clearing checks, processing international payments, and holding funds. Ally Bank, like many other online banks, relies on a network of correspondent banks to handle these essential functions. These banks are typically large, well-established institutions with a strong financial track record. Ally Bank's partner banks. While Ally Bank doesn't disclose a specific list of partner banks publicly, it's important to note that these institutions are subject to rigorous regulatory oversight. The Federal Deposit Insurance Corporation, FDIC, insures deposits at Ally Bank up to the standard limit, providing an additional layer of protection for your funds. Why use correspondent banks? Efficiency. Correspondent banks streamline operations, allowing Ally to focus on providing excellent customer service and innovative financial products. Risk management. By spreading risk across multiple institutions, Ally can better manage potential financial challenges. Regulatory compliance. Correspondent banks help Ally adhere to complex banking regulations and ensure compliance with industry standards. Is your money safe with Ally Bank? Absolutely. Ally Bank is a member of the Federal Deposit Insurance Corporation, FDIC, which means your deposits are insured up to $250,000 per depositor, one per ownership category, per insured bank. This FDIC insurance provides a safety net, protecting your money in the event of bank failure. 1. OW.ly. OW.ly. Ally Bank's partnership with a network of correspondent banks allows it to offer a wide range of financial services without the overhead costs of traditional brick-and-mortar branches. By understanding the role of these partner banks and the FDIC insurance, you can have peace of mind knowing that your money is secure with Ally. With that said, thanks for watching, and until next time.